markets didn't move much yesterday, apart from a couple of assets, which we're going to speak about in a minute. Markets don't seem to care about much about the impeachment hearings in Washington much. They seem to be more focused on US-China, and because there is no sort of developments there, then markets decided to remain somewhat muted. Everybody is waiting, holding their breath for the December 15th pretty much deadline, what the US is expected to add more additional tariffs on China. The Chinese are disappointed with the latest moves from the White House to vote for a bill that supports Hong Kong protesters. The things are getting a bit more complicated as we speak, but since there is no developments, markets are somewhat muted. What really moved yesterday was the dollar cut and also the oil. Oil moved because the OPEC output cut deal is likely to be extended to June 2020 now. And also on the dollar cut, Mr. Poloz speech yesterday told market participants really that they should be a bit not as cautious and to reduce their expectations down a bit about a rate cut. There's not going to be a rate cut. His comments were strong. And I mean, there's like chances of like about 10% now that there is going to be a cut on December 4, if I'm not mistaken, policy meeting. So dollar cut moved lower yesterday against the cut, right? We had a very nice retracement here, if you ask me. But since we are currently moving in a correction mode, okay, because we've had wave 3 over here, and we're expecting wave 4. And in the minor degree, we had 1, 2, 3, 4, 5, with minor degree here, 1 there, and then number 2 here, we're going down for 3, right? So we've got an ABC, which is the first correction, ABC, second correction, and a 5, okay? This pattern is a flat. So we are expecting a flat correction. And that is likely to take prices back to the previous high, which is 133.84, which is also the 161 extension of waves 1 and 2, okay, 133.89. So we could be looking at really prices after these move to the downside 4. Actually, that could be, I mean, that could really be like 3, 4, and 5, right? We will see how this pans out. But how I'm looking at this now is because it looks like we could be heading into an ending triangle over here, okay? It's the case. I mean, it might just, this outlook might change, of course, you know. We're not really sure how this fifth wave is going to end, but it looks like it is a very nice flat. And from there, we can start looking for prices to move lower. So I'm expecting this to also become some sort of double bearish signal, either diverging, you know, to the upside with a hidden divergence or a standard divergence, and then start moving lower from here. I find this a very, very strong level for bears. Okay. Now the other pair I wanted to check today, and because we are, of course, expecting the German GDP, German PMIs, as well as Christine Lagarde's speech, is the euro-dollar. On the euro-dollar, it is also indeed moving as we expected, right? So we're seeing this as wave B, and then up here wave C. Now, the truth is that we've talked about this A, B, and C, right? But and 4 being here. But I start leaning towards this scenario that this is an 1, A2, and a wave 3. Okay? We will see how this pans out. Of course, once we break above that level, and we'll see whether the price appreciation, if that occurred, of course, it's really holding above these levels, right? Remains outside the triangle pretty much. So now the thing is that we've ended this ABC, which is an ABC anyway, whether this is an A or a 1. We've got this ending triangle, and we moved to the upside, right? So this is wave 1. I see this at least as a wave 1. Then wave 2, 3, 4, and 5. Okay, so 1 and 2 will give us as a first projection the 111.89, okay, and that I'm looking at as wave 3. Then we should have a correction down for 4 and 5 around the 200 Fibonacci extension, which is the 112.30, or so, or it could be the 2618, but that would be maybe a bit overextended. And also that later scenario, it could be the case if this turns out to be a 1, 2, 3, 4, and 5 rather than an ABC, okay? Because the chances, of course, for an impulsive move to have an extended 5 are more than in a corrective wave. So in the short term, we've had 1, 2, 3, 4, 5. I see this A, B, and C, right? This C wave down here, I think is going to end just slightly above 110, okay? And that's because I believe because this is the last wave to the wave 3 and then 4 and 5. So we're really nearing the end over here, and we were really to push higher. Markets will try to push prices now as low as possible, possibly to the 88.6 Fibonacci retracement of this wave 1, okay, so that we can end with really good momentum and go up for another 3-wave move that is going to be probably on the 5-minute degree. So have a nice weekend and trade safe.